Warning Wednesday. Hi, welcome to the Froggy Five. I'm your host, Jim Freilich, founder and managing member of Froggy Companies. And today I'm super excited to be interviewing Andrew Campbell from Wildhorn Capital. I need a warning for listeners on something that's gone wrong in your business and that you've learned from, and then you've done something to make sure you don't make the same mistake again. It could be a bad deal or something like that.
Yeah. I mean, look, I think luckily and thankfully, knock on wood, we haven't had any, really bad deals or where we've missed or whiffed on underwriting. I think we're certainly not immune to the interest rate environment and, what's been happening, and the market's much softer today than it was, 2.5 years ago, 3 years ago, particularly in Austin. I mean, we had kind of consecutive years come out of COVID where we had 15% rent growth and then followed up by like 22% rent growth, consecutive and compounding like that. Everything looked good and was easy then. Now it's because of all that rent growth, you had a bunch of supply. People look at the population growth metrics and, we've got a lot of stuff delivering. And so operationally we're pretty flat. And you look at kind of the next 12 to 18 months is going to be a bit of a slog, in that supply's got to work through the system and interest rates are higher. And so, developers' cost of capital, our cost of capital, it's all much higher than it was, and rent growth has tapered off. So, not to say we don't have deals that are, not doing as well as we'd want them to, but when we haven't done any bad deals, I think the joke has been, hey, if you had to do it all over again, we were coming back from a property tour this morning with Hayden, who runs our acquisitions, and was saying, well, it's like the next time cap rates get to be a 3, we're selling everything. And I don't care what the prepayment penalties are. Like you sell everything and you start over. So that'd be sort of the one comment lesson you'd say, a joke of, if you go back and do it again, you recognize kind of when you're at a peak and probably sell a little bit more or a little bit earlier than you thought, even if it's super early in a business plan. But, some of the things we've always tried to value in the way that we've approached our business. And I think it's helped us navigate some of the times now. And again, it comes back to just being simple in the way you think about real estate deals, but we've never wanted to be over leveraged. So we have like a very firm and hard rule that we won't take more than 70% leverage. Our average leverage is like 60 going in is like 65 or 64%. And routinely, particularly in like, peak 2021, 2022, lenders saying, hey, we'll give you 80, 85% leverage. You can get more dollars. And we said, no, we're not taking more than that. That has served us well. We didn't take all fixed rate loans, which I wish we would have. So we've had some adjustable rate loans, and the cost of a rate cap is, 20x what it was and what you thought it would be. And so there's certainly lessons to be learned and taken from that, and how you think about protecting yourself and, sticking to some of the fundamentals. But look, I mean, that's not something that was unique to us, and kind of everybody that was doing deals had kind of migrated to floating rate bridge debt, because that's sort of where it made sense. And so you take lessons away from everything.
It must have been the UT education to make you guys do this much. So sell if you ever get to a 3 cap again, which you probably won't ever get there again, but sell. Try to recognize when it's low. Say it's down to 4 again. Sell. Don't over leverage. Maybe pick and choose variable interest rate loans. Maybe go fixed more next time if you feel like you're in between there, and you want to hedge your bets with a fixed rate, so you don't have something that could blow up. But nothing. It sounds like you haven't had enough bad experiences yet, and you already had $850 million under management. No other horror story, no other lesson you can come up with. If not, I'll move on to the next question.
No, I mean, again, thankfully, look, we've never lost people's money. We haven't had deals go back to the bank. We haven't had, so knock on wood. We're not perfect, but again, local. I mean, we're working our butt off right now to preserve value. And in a lot of cases, we probably won't make a nickel on some of these deals, but we're going to do everything we can to make sure our investors do. And that's important to us, and it's part of who we are. But I think we've been helped by some of those fundamentals. But no, it's not. We're not perfect, and it's not perfect. But we haven't.
Got it. Did you ever have to fire a contractor?
Contractors, yes. Property managers, yes. We've changed management. I mean, look, for sure you face challenges in day to day. I mean, again, multifamily is a hand-to-hand combat sport. The turnover, getting to know your managers, losing your managers, your maintenance staff, having to fire a management company, having to swap out a contractor. I mean, we deal with all that. You get, unfortunate situations, people passing away in your apartment. Like it's not all sunshine and rainbows. You're in the operating business.
That's the only soundbite I needed. That's the only soundbite I needed then. So I want to make sure everybody watching knows this guy's a Wildhorn. They do some hard crap every day too. It's just you guys persevere through it. It's just part of the business. You've accepted it. So,
Sean's at one of our assets right now. We had, plumbing backup popped up yesterday. So we're over there seeing what do we need to do? How bad is it going to be? What's the remedy? So it's every day. I mean, it's how tenants, toilets, and what's the third T? But it's
taxes, maybe. I don't know. Tenants, toilets. No,
every day there's something. The operating business is not easy.
But it sounds like you guys plan for it pretty well. You have margin in there for contingency. You make sure first and foremost your investors are protected, and then if you do really well, you'll make money too. Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.